Now, according to the Clur Shopping Centre Index, in the first quarter, trading density levels for prime-time retail space in South Africa dipped. But on the bright side, the rate of contraction was more muted than it was over the last 6 months of last year. Belinda Clur, MD of Clur International, joins us with greater perspective on the index and its findings. Thank you so much for your time, Belinda. Now, 2 questions so that we understand what we are measuring and where. Which areas is your focus on in South Africa? But also, what do we mean by trading density?
All right, so starting off with what a trading density is, it is a very simple measure of sales per square meter. And it actually forms the foundation of a shopping center or a retailer's health status. Because at the end of the day, if you think about it simplistically, a retailer or a shopping center or a property fund can't cover rent and expenses or be profitable if the sales that asset are bringing in aren't performing sufficiently. So that is really what trading density is. And it's also beyond that, from a broader perspective, it's a very important measure of consumer sentiment and economic activity. Because ultimately what people spend today is going to reflect later in economic and GDP figures. So actually tracking this measure serves as a really important leading indicator. So as far as the index is concerned, it is an independent retail industry standard, and it is also an economic indicator for these reasons. And it measures the trading performance for both listed as well as unlisted property funds across South Africa and Namibia. And the index is actually the tip of the iceberg. It is underpinned by a much broader asset management support platform that we run, and that helps funds to understand asset health and optimize returns. Our coverage in the index and across our broader platform is over 100 shopping centers and over 4.1 million square meters of prime space across the country, with some representation in Namibia. So, that's very good coverage. It's very representative of the South African market. And in coming months, we're very happy to let you know that coverage is going to be increasing to just over 5.4 million square meters and over 130 shopping centers across South Africa.
With that said, I also want to speak then about the importance of density outpacing CPI here and what we're seeing in that regard, because of course it's also an important part of how the sales per square meter relates to the macro environment.
So CPI is a very important comparative measure, and the reason why is because it's very important to understand whether growth is simply driven by price increases. So growth can be quite a misleading figure if you don't understand it in terms of what the broader economic price increases are doing. If your growth is simply driven by price increases, then you are only experiencing nominal growth. Whereas if it's over and above that, then obviously you move into real growth territory, which is what one wants, because that's true performance, real performance. And again, that ties back to a very important comparison in terms of measuring relative economic health of your fund or your shopping center.
Yeah, I mean, in terms of just how the big provinces have ranked, Western Cape, KZN and Gauteng, how is that looking in terms of that trading density, particularly what you saw in quarter 1?
Okay, so just firstly to set the scene nationally, we saw a trading density for the whole of South Africa coming in at just over 41,000 rands per square meter and growth of 4.4%. If we then look at the provinces, I'm just going to paint broad brushstrokes for you over time since about mid-2018. So we see that Gauteng tends to hold a very firm and steady trend. It closed quarter 1 at a trading density of 40,000 rands per square meter, 5.9% growth and 0.6% positive real growth relative to CPI. If we look at KwaZulu-Natal, we see that it shows volatility over time, but at times extremely good strengths. And that closed with the second highest trading density of 42,700 rands per square meter, negative 2.4% growth for the quarter, and negative 7.7% growth relative to CPI. And then we see the Western Cape being our top performer of the 3 provinces that we now measure. And this province has actually been on a performance trajectory since 2023. And it actually had the longest COVID recovery of the pack. And it's currently sitting at a trading density of 45,500 rands per square meter annually, 8.2% growth. And that means that it's outperforming CPI by 2.9%. So that is our top performing province.
With that said, I want to speak about identity as you refer to it here. I think it's an important part also of being able to make sense of these numbers, Belinda, but also what might be driving a density, I guess also showing what consumers value in a retail space.
Okay, so I suppose that there are two aspects to identity. There's the identity that's attached to a specific shopping center, and then there's the identity and personality of a particular province. So if we look at our broader national index, we see that actually, in terms of trading density, the two center types that are generating the highest trading densities are actually the very large super regional shopping centers, and then also the community and smaller centers. So we see that super regionals have a trading density closing at just over 49,000 rands per square meter. So that's almost 50,000 rands per square meter, and they're beating inflation by 0.1%. And then the community and smaller centers show a trading density of just over 42,000 rands per square meter. So this suggests that the market is preferring either the very large or the very small centers at the moment, rather than those in the middle. And I think from an identity perspective, it's very much easier to have a specific identity when you are either very large or very small. Super regionals at their sizing of over 100,000 square meters have a natural gravitas and identity that's automatically defined by destination shopping and entertainment that they offer. Whereas your smaller centers actually have the strength of a natural intimacy and a convenience appeal. I think that mid-sized centers maybe struggle to find an automatic identity because of being in the middle in terms of size. And I think that if we look at the current consumer position, these centers should capitalize on embracing more of a lifestyle position with a focus on the big consumer trends at the moment of finding a work-life balance, a focus on health and fitness, wellness, and Zen seeking. But if we have a look at the provinces, we see that they have a different kind of personality and positioning. Gauteng is very much identified by as being a solid business center. It has a very firm, steady business heartbeat as a result. I'd say that's its identity. If we look at KwaZulu-Natal, this has been subject to many forces over time, hence the volatility I spoke about earlier. We've seen terrible floods, we've seen horrific logistics issues, civil unrest. But then counteracting that, we see a very popular summer holiday destination coming out of KZN when you compare the provinces over December. And we find that actually KwaZulu-Natal is the star performer for the December month ever since 2019 of the three provinces. So it holds a really strong summer holiday destination and personality positioning. If we then look to the Western Cape, we see that this has a very international and let's call it a functional positioning. Things work well. It also attracts the highest level of tourists, so more forex is coming into the province. It's got the lowest unemployment rate and home loan defaults across the country. It's got the highest business confidence. It's got a great property market. It also hosts international business and sporting events. It's the seat of parliament. We know about semigration. That's been in the news often. It's got a lower rate of load shedding, better road condition, fewer potholes, etc. And we also see, interestingly, that it actually tends to have an extended festive season relative to the other provinces. So typically, what happened in 2023 is that there was a shift away from more of a combined November and December festive season, which used to really quite strongly incorporate the effects of November's Black Friday and linked deep discount deals. And now there's been a shift towards a December only, a return to a traditional December only festive season. However, if we look at the Western Cape, it actually supports the extended festive season to a greater extent of both November and December. And actually, if you think about it, that spills over in the Western Cape really into the first quarter as well. So, what we saw across the nation was that really December's trading actually put Black Friday in the shade. And across all the provinces, we saw that December was much stronger than November, with that Western Cape showing the combined festive season between the three.
Well, thank you so much for your time and giving us insights into those shopping center trends across South Africa, Belinda. That was Belinda Clur, MD of Clur International.